Hi, guys. Thanks for tuning in to another episode of Nuggets News. We're back with our monthly commodities report with our friend Marin Katusa. So, thanks for joining us again, Marin.
My pleasure.
What an exciting month. If you had told me that gold was going to go up $100 in a week and silver was going to catch up to the tune that it did, I mean, a lot of people wouldn't have believed you. So, you guys must have been very busy and it's all very exciting.
It's been very, very good.
Where do you want to get started here, mate? I think everyone wants to know about gold and silver, but I thought we maybe should start with some controversial news. Have you heard about what's going on with the Perth Mint and the LBMA and their accreditation from sourcing this from? I'm not sure what the exact, rules are. Do you want to walk us through all that?
It's actually been out for a couple of months. We wrote about this, I think it was about 2 months ago. And again, it comes back to, it's ethically sourced to be able to verify or authenticate where's the gold actually coming from, because it's not just a Perth issue. This is across the board. And for people to think about it, think of it as like blood diamonds, what they had with the issues in the diamond industry about how do we know that this isn't being mined illegally or through the blood diamond sector. They're trying to bring at least some sort of code, and it's the right thing to do, but it's going to be very difficult. And it comes back to what I talked about, the swap line nations and all these different aspects, because so many people with gold, it's very different than diamonds, of course, because no one diamond's the same. But with gold, when it starts getting melted, it's virtually impossible to figure out where it comes from. So um, you know as the Perth Mint and the Canadian Mint and the US Mint and the London Mint, they all are starting to pay attention to this. That black market will just be diverted to, say, places like China or Russia, where that authentication or verification isn't as important to them as it would be in the Perth Mint. So it's eventually, what does it mean? It's going to, really bifurcate the market of the proper channels, the proper companies, and where the big market is, for the Western world or the developed world buying it, they want to have that verification from the Perth Mint or the RCM, like the Royal Canadian Mint or the U.S. Mint, to say that this gold, silver came from ethically mined, proper source mined companies, and then that other gold that isn't authenticated or certified, that will go to the other mints. And then the big question is the opaque markets. What's going to happen with that gold? Where will there's going to be a lot of questions, but it will all of that will drive the price of gold higher. It's bullish for the price of gold, especially for companies that are in the right place, right jurisdictions with long mine lives. That's where you want to be.
And do we have any figures? I think I read 10% yesterday. Is this a danger of growing to larger than that, or is it pretty small and insignificant at this stage?
No, it's pretty large. I think it's going to be higher than 10% for the data that we've read.
Okay. And this is actually very similar to what we see in the Bitcoin world because Bitcoin is somewhat traceable on that public ledger, and you're starting to read things like if there's a Bitcoin ETF, it has to be freshly mined coins with no tainted past. So there's actually a lot of overlap here, which I find really interesting. And in some countries, it developed a premium. So do you see that for gold as well? That there might be a
Totally.
premium for the official companies that need the clean gold, but can there actually be like a black market premium as well for these countries that don't want to have to deal with all the red tape?
Well, we can look at, let's say, the diamond market, for the rough market, and what happens there is you have when it had its proper kimberlite verification process, that costed money and people. But what started happening, there were areas that the blood diamonds would find their way, and they would try to incorporate those diamonds into that system. So this type of system, the non-verified will actually trade at a discount in the black markets, and then the arb will be made up by people trying to figure out how to put it back into the system. But with gold, you'll see there'll be, I do see demand in, say, China or Russia for that type of gold. Conversely, for verified, where the mints will say, yes, we have verified this comes from this mine and this source, it will trade eventually at a premium because there's less verified. And if you start looking at, where the major production is, there's a lot of um, non-verifiable gold, and it probably makes up anywhere between 8 to 12.5% of the annual production. The other thing is, what about recycled gold? What about all the gold, that historical gold that it's all, it's impossible to verify where it came from? So there's a lot of questions that are going to be garnered here.
Yeah, I completely agree. And again, there's better ways to mix Bitcoin and make it more private. And I completely see that happening with gold, where India can say, well, this was all melted down. It was, from jewelry. There's going to be so many ways that people get, I guess, funky and interesting to sort of get around that.
Well, it's going to be like, companies, let's say, jewelers like Louis Vuitton or Tiffany's or uh, you name it, even companies like Apple. Like, a lot of people forget the big phone maker, Apple. Just from their recycled products, they produce about 40 to 45,000 ounces of gold a year just from their products being recycled every year. So that, again, the recycle process of that will also garner a different market than non-verifiable recycled products. So this is serious stuff that is going to happen in the next few years, specifically as gold is touching all-time highs, and you're going to see a lot more of this black market gold that isn't permitted, that isn't done properly, hit the market because of the all-time high prices.
Yeah, well, maybe that Apple point is a good segue into silver because it has played catch up. Now, everyone wants to know what's the cause, and as always, I think there's normally a mix of reasons. The gold to silver ratio, there's some traders that look at that, there's some people that just saw silver as undervalued and thought it was going to play catch up. What are you seeing at the moment? Is there anything in particular? Is it just a mix of all those things? But it's been phenomenal for the silver price and the silver miners.
For sure. There's a few things. First, there's the paper silver price, and then, the largest bullion dealer in Canada has become a friend of mine just because I do a lot of volume and business with them. The actual premium to the physical is much higher to actually get physical silver versus the paper silver. The paper silver has moved, I also think, because of the Robinhood traders. As it's getting more momentum in trading, you've had a huge, significant increase. Whereas, most online discount brokers, they don't have the ability to buy the GLD or buy the silver, ETFs, the actual buy the gold and silver commodities. Well, Robinhood has it as a very easy way to play it. So you've had this momentum going, and also the fact that the economy, people are speculating that will it get better. And silver's, not really an industrial metal and not really a precious metal. It's got one foot in each side. And about 65% of its demand comes from industrial demand. But everyone's talking about how much is going to go in the solar panels. Remember, the efficiency of the solar panels every year, even though the industry is growing, that specific unit is being optimized and improving. So that unit that used to have every year improves by about 2.5, 3, 4, 5%, and you'll need less and less silver for that. But as the sector grows, yes, you'll need more silver. So it's a combination of all the above. And with gold touching all-time highs and then breaking through it, silver has seen some of that because, let's use it for example. A lot of the big names have said gold's become too expensive. I've sold my gold, and silver's more affordable for the everyday person. There's also that aspect of the speculation factor.
Absolutely. Again, that is a huge, I guess, occurrence in the crypto space where people come in and they say $10,000 for Bitcoin. No way. They look down that list and they look at what's cheap. It's called unit bias. And that was something that I think we discussed in a previous episode. And that is something that takes hold, but very much the Robinhood traders. You can see the figures. It's gone, I think it was eightfold increase in the number of retail traders that are holding GLD, the SLV, but then also the leveraged ETFs. And I think we touched on this as well, but do you want to talk about how the leveraged ETFs, just because you own a double or triple gold ETF doesn't mean you're going to make double or triple if gold goes up over time?
I've said it so many times. Those are weapons of mass destruction for retail investors. We've seen what's happened with the price of oil because of these types of products, right?
Yes.
So as they rebalance, people can get caught on margin on these factors, and it's just not something I believe with the leverage ETFs, with the high frequency traders and what's going on. Be very careful. Do not, if you are going to play around and screw around in that sector, do not buy and hold because it could rapidly change. Like I think it was today actually is the options rollover date for the futures market, and you have so much manipulation going on, you can get rattled out. And if you're on margin, watch out. It's I really tell people to avoid that aspect. And a lot of people, because of the momentum, are speculating and gambling in areas that they perhaps shouldn't be. And you don't need to take those risks, Alex, to make big gains. Just keep it simple, invest in the top people that with the top assets, and you can make money. You don't need to take crazy speculative bets.
Maybe again, you said in the pre-interview you wanted to touch on the scams, and this is something that comes out of the woodwork every time there's a bull market in the crypto space or the gold space. So there's not only the scams that are promised to make 10% a month, they're very common in this sector, but there's also the bad projects that come out and try to get funded. So do you want to talk about how that happens in the gold space, because it's prominent in the crypto space too?
So for sure, like if anything, anyone gets out of this call, it's this right now that I want to talk about. I'm one of the largest financiers in this space, and I have seen so much crap get financed. Douchebags who shouldn't be, they're probably not qualified to be, washing used cars at a crappy dealership, are now creating deals and running deals because it's 1950 gold. And the average retail, I'll give you a perfect example. My wife is good friends with someone, with a husband who's a director of a major brokerage firm. I call it blue blood money. You have to have a minimum $10 million account, blah blah blah. And they were over on the weekend, and he asked me about a stock, and I started laughing. I remember I just got out of my 2 week quarantine, so I was just happy to see people. And the stock wasn't something that anyone should be buying, but because the guys have been this, so many people have been not in the gold space and not in the silver trade, they're seeing these massive gains, and it's FOMO, the fear of missing out. And so many deals are being marketed so well through social media and all these different aspects that it's not about logic or value. And so many people are going to get sucked into this, one sexy drill hole. Well, be careful. Where is that drill hole? What is the reality of that ever being taken out? Because these companies, you can buy them, and so many of them, as my good friend Doug Casey calls them, a burning match. They'll need money, money, money. They'll be financing. There'll always be a way to buy them, but how do you get out? When is your true liquidity event? And the liquidity factor, so many of these juniors, even if they are listed, be careful of what you're buying, because I'm seeing a lot of private deals get funded by bankers and brokers, and then they miss the window of going public. Look, a correction in the gold markets, very realistic. Focus on the people. Have these guys ever sold a gold project, or were they in marijuana a year ago? Who's the backers of the financials of this? What type of project is it? Do they own it? Have they owned it for a while? Or are they just optioning it now that it's $1,900 gold? And what is the actual exploration program? Are they just talking about the project and how big it is? And on their website, it's just about gold, and all these guys talking about how the US dollar is going to zero and gold's going to the moon, but they're not talking about their project. How many PowerPoints I see that are trying to explain the gold market and why gold's going good. Don't waste your time with that. Tell me why your project is good. And who are the players? They're, if these guys weren't around at 12, 13, $1,400 gold, and they haven't been in the industry for many years. Now, granted, there's an old saying in the industry, God created the gold, but the devil took it and spread it around the world. You never know who can stumble across a world-class deposit. But generally speaking, bad people will make bad decisions and waste that money, and good people will make good decisions and really efficiently use it. So stick to some simple rules. Who are the insiders? What are their cost base? Are they in at 5 cents and now they're trying to get you to pay $2 because it's a hot gold market? That's a ringing of the bell to stay away. Number three, where is this? Is this in the middle of some African country that the guys have never been to and they have no local partnerships? That's a pretty quick no. What is the liquidity of it? Like, is this a tight structure where management control and manipulate the stock? There's a lot of that going on right now. So I'm just trying to advise everybody, gold is hot, gold is sexy. Everybody wants to know what's the next equinox. How many guys have contacted me to, oh, Marin, we want to get you involved. I'm like, you do an equinox when it's $1,200 gold, not when it's $1,950 gold, right? So just trying to bring everyone to reality. And the next step is a natural breather and a correction in the gold market. You see it in the equities right now. The big producing companies, like I'll use Equinox as an example, it's still trading under NAV. You got the best management team in the business, in my opinion. They're young, they're strong, they're invested, they know what they're doing, they've been there their whole life. But the equities are actually a cheaper way to play it than gold right now. gold from all of the technicals is showing that it is a little bit overbought. Doesn't mean it can't go higher, but all of the Robinhood traders, they haven't seen a pullback. And that's something that I believe the next pullback, you want to really load up on gold and the best run gold equities. But there's nothing wrong with taking some good profits in this strong upturn that we've seen the last couple of months.
Yeah, and I think this is something where you can learn a lot quicker. So compared to trading the stock market. So if you went around the dot-com bust or the GFC, you haven't really experienced this cycle of emotions and all the fraud that Marin's talking about. Whereas if you're in the crypto space for 3 years, it's almost like a lifetime because you've seen the ICO and the Bitcoin bubble. Then you saw more recently the DeFi bubble, where we were talking about in pre-interview, we've taken profits on some of these things that have gone up 100x. And now people are contacting me, Alex, do you want to advise on my project? We're the next big DeFi project. And all the new users are joining the space. Well, what's the next big thing? And my advice is, well, I don't think there is a next big thing. And I think a pullback is coming. And I think it's time to look elsewhere. And people don't want to hear that. And it's exactly the same from what you've just described in the gold space as well, guys. So look, be careful. The time to buy and average in was before. You can always dollar cost average into gold and silver if you're a super long term investor. That's fine, but just be so cautious about everything that Marin has just described there. Because if you're new to the space and you're all excited, the chances are that you're buying the top normally, isn't it? All right. Next up, Marin, on the list, the swap lines that you've discussed. Are there any new, I guess, counter arguments that you've seen? And one thing that I just wanted to mention quickly was I don't think people realize that even with these swap lines, when people say, well, the Fed's printing all this money, the other country has to print a one for one, don't they, to borrow that money? So it's sort of, it levels out. You can't really make the argument that it's the US dollar that's getting trashed, can you?
Well, there's this misconception that when the US Fed gives a swap line, first of all, they're not going to do it unless it's an ally and that accepts the terms and conditions. But let's just say the Bank of Japan. So many people said, yeah, well, it's not a big deal because the US government prints US dollars and the Japanese send over yen.
Yes.
That's not how it goes.
Okay.
There's the reason why they have that demand is it's a demand for US dollars in the Japanese market. Then from the Bank of Japan, they direct it to what the US dollar need is. And then the interest rate, depending if it's a 7 day or 84 days, so it's 1 week or 3 months, it rolls over and it's worked, right? So those economies are starting to pay back the swap lines, but it's slower than during the GFC. Number two, the FT just put out a huge thing about all of the countries that are applying for swap lines. Like India calls it, what did the president call it? Prime Minister Modi called it swap line envy. And he's got swap line envy because they need access to the shortage of US dollars. I never said that this is going to be like a 6-month thing. This is going to be many years. And as MMT plays through its market, so many people are thinking that this is the reason why gold is rocking and all this money printing, it's all inflationary. It's actually deflationary. And it's a hard thing for everyone to grasp. And, it goes back to the flow of capital and the difference between debt versus how MMT, there's a psychological change, there's a behavioral change, not just in the central banks, but the investors. And the swap line thing is just starting. And you're going to notice that the next tension, the US dollars, definitely it's been under very strong weakness. Why is that going? But if you take the longer term, if you take over the last decade, look at the Turkey lira versus the US dollar. It's down over 70% relative to the US dollar in the last decade. You're in Australia and I'm in Canada. Both of those former Commonwealth nations are both down about 20% over the last decade to the US dollar. So all these gurus coming out and saying US dollar down, gold's going to the moon. First of all, most of these gurus don't have a pot to piss in. Okay, they're not serious players. They do not have any real wins to their name in any of these gold companies. They've never been on a board or built a mine or done any of that. So be very careful of what still over 60% of the reserves of all the central banks are in US dollars. The currency, over 40% of all SWIFT transactions are in US dollars. We're far from the collapse of the US dollar. Yes, there's weakness now. The weakness that we're seeing right now is alleviating the US dollar demand that's in the international markets. Now, the other thing that you mentioned, have I heard any counter arguments? And people message me, and this is a working thesis. And I'm not saying that this is exactly how it's going to be. I'm saying that the central bankers are going to do whatever it takes because the biggest thing they fear is deflation. Deflation is way worse than inflation. Secondly, what about all these assets that these foreign countries can sell if they need US dollars? And here's the fundamental shift that nobody's truly grasping. If they own these assets, which they do, but when they need the US dollar and during these market sell-offs, who are they going to sell these assets to? So that asset value fluctuates. They may carry it on their books at X or say $100 billion or whatever that asset their portfolio is worth. But when they have to move it, who are they going to move it? So maybe they have to move it at 60 billion or 40% or 65%, whatever it is. But that debt doesn't shrink with the market. It only grows with interest. Okay. So that's where we're seeing the big difference. And, as MMT keeps going, the demand for these US dollars is going to continue. And we're far from out of the woods. The next $1 trillion stimulus that needs to be approved by the governments, it's going to get approved. It's politics. It's going to happen. And regardless of who wins the US election, whether it's a Republican or a Democrat, they are committed to printing money. The only difference between the two parties is the Republicans believe that the free market should decide where that money going from printing should go. Democrats believe that they should direct it to specific sectors of their political beliefs. For example, Biden talked about a $10 trillion green energy stimulus. Well, that's going to have serious inflationary pressures in that subsector, and then it'll have deflationary pressures on the associated sectors to that. So we're far from the swap lines being a done deal. It's just starting. This story is just starting, and MMT is going to have implications that people haven't even figured out yet.
Yeah, I completely agree. It's something we've covered on the channel a fair bit. And yesterday in Australia, we got the figures that we had was it 2% quarter on quarter deflation for the first time, I think ever, or in decades at least. So, like Marin's saying, we've got this debt. Now our economy and the amount of money we've got is sort of shrinking, and it's getting harder and harder to pay back that debt. So, yes, the US dollar, the Dixie, has been down on the charts, but I think that's relative to the large cap currencies. If you look at the others, like we did last night in the live stream, we talked about Turkey. It's still, appreciating against a number of these other smaller currencies. Could you just walk us through? So again, I just want to clear up my understanding on the swap lines. I thought that if someone borrows, they do have to put up some form of collateral to get that swap line, and that's what I was getting at before. And you're saying they don't have to put up a one for one. So how does that
Well,
work?
it's a pre-approved amount. So, for example, let's take Japan because they've been the ones that have really dipped in, or the European Union has, was it 29 nations that they would have spread it across. So, Japan has stimulated about 2.1 trillion US dollars since COVID. At the same time, I think the max, they took over 200 billion in swap lines, and they have started paying it back, but it's broken up within 7 day and 84-day loans. And the interest rate is subject to what their need, depending if it's 7 days short-term rollovers or 84, it's going to have a higher rate.
Yeah.
So they've gone through that route. I think at the peak it was, I'm going off of memory, but around $500 billion was the peak that was drawn down in the swaps. About half has been paid back because things have alleviated. And then that's how it keeps rolling over. But they got to pay it back in US dollars.
Okay, that's all right. I'm going to do some more reading on that because I think that is one of the most important things to understand for all these different countries at the moment.
And think about I don't want to call it an off balance sheet, but the subsector of that US dollar denominated debt. Like if you take for example, if you want to talk about Japan, well, Mitsubishi is their GE, right? It's a huge conglomerate, makes from, copper to cars to toys. They're so vertically integrated. And when they trade and buy their commodities, it's always in that US dollar. So their need is in US dollar. If the market squeezes up, there's a shortage, they go to their banks, and then the banks go to the central bank, and that's where the swap lines come in to get alleviated, right? And that's where Turkey, if you see, they've pulled back off of the offshore drilling with Greece because they don't, people were surprised that Erdogan is actually playing ball with the US and the EU, and they've also applied for swap lines. So there's a lot of politics going on behind the scenes that won't make the news until after. So this whole swap line saga is just starting, and it's far from being over.
Um, are there any countries at the moment that are standing out for you that are really going to be affecting the supply of gold or silver, whether it's the COVID health reasons or political reasons that are starting to emerge? And how much do you think that is going to impact? Well, even other markets like uranium, for example, was a question we got.
Well, uranium is a big one because Kazatomprom produces a little over 40% of the world's primary uranium. So, like, that is a great one to explain. And Kazakhstan has had some serious issues with COVID. And because of the way the mines are situated, they're ISR projects. And people think, well, then why is it an issue? Well, you got to keep drilling to stay ahead of next year's production. So you drill, you get the basin pregnant with that solution, and then you lift it up next year. And if you don't stay ahead of the drilling zones, you drill and then let the water load, and then you produce, and they're kind of, because Kazatomprom has said numbers are going to be down. So that's what you're seeing in places that are niche markets. If you want to talk copper, about just under 40% of the world's primary copper production comes from Chile and Peru. Both have been struggling with the COVID. It hasn't really been getting better, but the countries need that revenue, so they are on side pushing as hard as they can to prevent, let's say, shutting down of some of the major mines. Now, the mining companies have done what they can, but when the infection happens, it happens. On my Twitter, I was for about a month every day, I would give the updates of how much production was coming offline. So if you take something like silver, silver is generally speaking a byproduct from other mines, right? From copper porphyries. But silver had a big impact on their primary silver mines because that's much smaller amount of the percentage versus, say, a gold mine. Like a gold mine can stand on its own. Silver, there's much fewer. So it'll have a bigger impact on what I call these niche metals like uranium and silver. And the question is whether it's one big wave or the second wave in the fall. That's a serious issue that hasn't been resolved. So, I think the economy, people are getting tired of, COVID. They're tired of social distancing. They're getting tired of anti-socializing and going to concerts and stuff. So people are starting to, I guess, get bored of the precautions. And I think this fall, you have a lot of potential black swans with the election, with the second wave. If no vaccine comes and it kicks into next year, there's a lot of potential black swans. And everyone's written off the US dollar. If you just Google it, everyone's calling for the demise of it. It's the bond market is telling you that there's actually going to be a correction in the equity market. And the bond market is way bigger. And I'd like to think it's much smarter than the money chasing the equity market. So this is a very dangerous time.
I couldn't agree more. We always talk about the bond market being the smart money, and it's giving conflicting signals. And yesterday, we actually had a number of crypto influencers putting out videos about the death of the dollar. And again, that to me is the contrarian red flag
Yes.
waving. But I think
The irony of that, Alex, is you go to these places and what do all the professional athletes want to get paid in? What do you want to get paid in? And well, you're a bit different actually with the crypto, but it's US dollars. And yes, the real yield for the 5, 7, 10, 20, and 30 year, when you take the yield minus the inflation rate that the government says, the real rates are negative. So right now there's a lot of forces against the US dollar. But I just like to remind people, don't bet against the US dollar, because at the end of the day, when shit hits the fan, even gold, I've talked about this a long time, gold will get sold off to chase that demand for US dollars.
absolutely. Well, Marin, maybe just to wrap up, we'll touch on some of the, I guess, winners we've had lately, because it's always good to, I guess, have a little humble brag. When it all comes together, we get the bull market, the research pays off. So Guys, there's plenty of free research and reports over on Marin's website, which I've always put in the links below. We've had dozens of you sign up to his paid newsletter as well with the picks. But do you want to tell us some of the better stories there?
Well, we've had really, I haven't had any 100 baggers like you, but we've had, six, seven, 8 baggers, and that's been really good for this market. But, you know, one thing I really want to caution is this one statement. People say, oh, Marin, my stock went up 7 times too. And, I said, okay, but your liquidity factor, the risk you took, and, you know, I come in at the same price as my subscribers. And the way I do my research is we look for a management team that have skin in the game where they're the largest shareholders at the same price as we're buying. It's this whole framework I have, my team calls it the Katusa's keys. But you see, the risk that the market is taking, there's no doubt that when you get a bull market, most things will go up, right? But what type of liquidity factor are you playing? What type of risk are you taking that you might not even associate with? Because if the market pulls back, what happens to that share price? Number two, we've had some great production stories that have gone up threefold, um, that still have upside because we get in when it trades, in the fundamental values. In this market, everyone's come to forget the axioms or the true rules of investing. And, I use Warren Buffett as an example. He's the greatest investor of all time, and people are mocking his system. The gurus of today, the social media giants are talking about, that's the old market. Bullshit. Okay. Stick to value, stick to fundamental analysis. Okay. And when I say fundamental, understanding what do you have and what it's worth and what are you paying for it. Okay. And don't chase things that are hot and being pumped and promoted and being overbought by whether it's algorithms or whatever reason. And in the next 15 to 45 days, I'm putting out an alert on a major financing that is listing on the New York Stock Exchange. That average people, because I started out with nothing. Okay. I do not come from a silver spoon fed family. I created everything in my net worth with myself. And with this, we invest at the same price as the insiders on world class assets and not paying 1950 gold, where paid when it was set was 1400. By being able to invest and have the liquidity of going on the New York Stock Exchange rather than some really small story with warrants that list and trade, and there's big upside and you've de-risked it, that's how you play this game. That's how I'm doing it. You don't need 100 gold stocks. We have 5, okay? And all of them are kicking ass. And they're run by excellent management team that fit my formula. We're going to add this one, and it's not just accredited, it's going to be available to non-accredited people. And it's going to be listed on the New York Stock Exchange with US dollars. That's the type of stuff that I'm looking at putting my money in at the same price as management. And that's how you de-risk it. That doesn't mean it's going to be a guaranteed win. It still has risks. Everything in this game has risks. But if you're in at the same price as the guys who are running it, the odds of you, well, if they win, you win. But it's a different story when so many of these stories I'm seeing get financed right now where the insiders have 5-cent paper and you're coming in at a buck. Well, they're already 20 times at odds to you. You're not in at the same price. You're not in the skin of the game equal. So that's a big, and it's also a big reason why management teams are probably the most disliked guy in the business. The good thing of that, a very well-known money manager out of New York said, man, you got balls of steel to say some of the stuff you say. You're in the belly of the financing gauntlet. Vancouver, where I live, is where all this action happens. And I say, I'm okay with it because the beauty of telling the truth is you don't have to remember what you say. And number two, I don't want to go to dinner with most of these management teams. Okay. So by saying the truth and calling a spade, I won't be invited to those dinners and I won't get caught up in that nonsense. By putting it out there, I don't have to waste my time dealing with it. So stick to the quality, stick to the good guys like the Ross Speedies of the business, the Lucas Lundin, who are the first to write the check in every financing. Stick to the winners and who know their niche. You cannot go from crypto to marijuana to gold to uranium to copper. So much of the industry is that. Focus on Pareto's law and just the basic numbers, and you'll do yourself very, very well.
Yeah, fantastic life lessons there. And as Marin said, we might have got those 100x in DeFi, but it's impossible to take a large position in those. You know, you probably can get $1,000, maybe 10,000 if you're really lucky. Whereas investing in these, gold companies or larger companies, you can build substantial positions. Or if you're investing in Bitcoin, you can build $100,000, $1 million position. So these are all the liquidities, and like I always talk about, it's venture capital style investing. I'm prepared that a lot of my investments are probably going to go to zero, but we're hoping that the winners outweigh the losers. So, Marin, that's been fantastic. All the links to Marin's stuff is down below, guys, and we'll catch up again next month. Any final words, Marin?
No, just stay well, and let's hope a vaccine does come, because it'd be nice to get back to normal. Just to travel to the site visit after a week away from my family, I had to spend 2 weeks self-isolated away from them, and I'll tell you that takes a toll, not just on yourself but your family, to do what you got to do to try to bring the best research to your clients, and it really sucks. So let's hope things start to change better.
Absolutely. Thanks a lot, mate, and I hope you guys have enjoyed that one as always. Cheers.
Stay well.